Welcome to the Daily Business and Finance Show. Consumer prices rise, COVID vaccination updates, Chinese president's call for technological advancement, Kraft Heinz stock falls, InMode lowers guidance, Wall Street criticizes university's Israel stance, Ford Motor hit by UAW strike, market closes lower on CPI data. Stay tuned after the short ad break to learn more. In September, the Consumer Price Index in the U.S. grew at a slower pace of 0.4% compared to August's 0.6%, but still exceeded expectations of 0.3%. The increase was mainly driven by higher shelter costs, which accounted for over half of the overall rise. Core CPI, which excludes food and energy prices, remained steady with a monthly increase of 0.3%, in line with forecasts. Year-on-year, CPI rose by 3.7%, slightly higher than the expected 3.6%. Gasoline prices also contributed to the rise in September's CPI, while food prices increased at the same rate as August. Experts believe that upward rates are mostly behind us and expect discussions to shift from how high rates should be to how long they will remain elevated. The probability of the Federal Reserve keeping interest rates unchanged at its upcoming meeting is now at 93.5%, up from previous week's figures according to CME FedWatch tool data. However, there is an increasing likelihood of a 25 basis point increase during December's meeting. Recent increases in long-term Treasury yields and geopolitical tensions have tightened financial conditions and cooled economic activity somewhat, but experts do not anticipate the Fed declaring mission accomplished anytime soon. Core CPI figures showed increases in rent, owner's equivalent rent, lodging away from home, motor vehicle insurance, recreation expenses, personal care costs, and new vehicle prices. However, used cars and trucks as well as apparel saw declines. This update on U.S. economic indicators highlights trends in inflation and interest rates that impact consumers and businesses alike.
Over 7 million Americans have received the newly designed COVID-19 shots for the Omicron subvariant, according to the U.S. Department of Health and Human Services. The Centers for Disease Control and Prevention recommended Pfizer, BioNTech and Moderna's updated mRNA-based vaccines for individuals aged 6 months and older. Novavax also received regulatory clearance for its protein-based shot. This marks the first time COVID-19 vaccines are available through commercial markets, with 56.5 million Americans having already received bivalent COVID-19 shots introduced last year.
China's President Xi Jinping has called for the acceleration of breakthroughs in core technologies and the modernization of supply chains. This plea comes amidst escalating tensions with the United States regarding planned technology restrictions. President Xi stressed that provinces along the Yangtze River should assume responsibility for ensuring food, energy, and supply chain security. China aims to increase its computing power by more than a third within 3 years to enhance self-reliance. As a result of these developments, Chinese tech stocks such as JD.com, Bilibili, Baidu, and Alibaba have experienced declines.
Kraft Heinz stock has experienced a decline of 4% today. This drop brings the stock to its lowest level since November 2020. The decrease is primarily attributed to inflationary pressures leading to an increase in food prices. According to the Bureau of Transportation Statistics, food prices have risen by 3.7% year-over-year in September. This surge in costs has impacted Kraft Heinz and contributed to the downward movement of its stock. Despite these challenges, analysts maintain an average buy rating on Kraft Heinz. They believe that despite the current difficulties faced by the company, it still holds potential for growth and recovery. It's worth noting that Kraft Heinz has encountered a challenging year overall, with its stock currently down approximately 24%. However, analysts' positive outlook suggests that there may be opportunities for improvement in the future.
Shares of InMode experienced a 13% decline in pre-market trading today. The Israeli company, known for its aesthetics medical equipment, has revised its financial guidance for the year 2023. This revision is attributed to a seasonal slowdown and higher interest rates affecting potential buyers. InMode now anticipates its full-year revenue to be in the range of $500 million to $510 million. This is a decrease from their previous estimate of $530 million to $540 million. As for the third quarter, adjusted earnings are projected to be between 59 cents and 60 cents per share, with revenue expected to fall within the range of $122.8 million to $123 million. The company's complete earnings report will be released on November 2nd.
Wall Street hedge fund giant Bill Ackman and Apollo Group CEO Mark Rowan are expressing their disapproval of Harvard and the University of Pennsylvania's stances on Israel. Rowan is demanding the resignation of UPenn's president, accusing the university of tolerating anti-Semitism. He is also urging donors to withhold their financial support. This criticism arises following UPenn's hosting of a literature festival that featured individuals accused of promoting hate and racism. Meanwhile, Ackman, an alumnus of Harvard, is calling on the school to disclose the names of student group members who signed a letter blaming Israel for recent conflicts with Hamas. Despite facing backlash, both universities are standing firm in support of their leadership positions.
Ford Motor Company shares have experienced a decline following the United Auto Workers Union's decision to extend its strike to a crucial truck plant located in Kentucky. According to Bank of America, this work stoppage is projected to have a significant impact on Ford's earnings before interest and taxes, with an estimated weekly loss of $247 million. This translates to a decrease of 50 cents in earnings per share. Analysts suggest that the strike could potentially cost Ford up to $430 million in EBIT, equivalent to an 80 cents reduction in EPS per week. The exact reasons behind the strike remain unclear. However, it is speculated that unresolved issues regarding UAW representation at electric vehicle battery plants and pension benefits may be contributing factors. This move by the UAW raises concerns since Ford has already made substantial concessions compared to other automakers. It is worth noting that further concessions from Ford, General Motors, and Stellantis could pose long-term financial challenges and may not be sustainable.
U.S. stocks closed lower on Thursday due to a surge in Treasury yields and higher-than-expected consumer inflation data. Delta Air Lines and Walgreens Boots Alliance reported their third-quarter earnings, with big banks set to report on Friday. The Nasdaq Composite fell 0.63%, the S&P 500 declined 0.62%, and the Dow slipped 0.51%. Rate-sensitive sectors like utilities and real estate were negatively affected, while technology and energy gained. Treasury yields rose after the CPI data, with the longer-end 30-year yield reaching a session high of 4.89%. Initial jobless claims remained near historical lows, indicating labor market resilience.
Thank you for joining us on today's episode of the Daily Business and Finance Show. Stay tuned for more insightful discussions and updates. Goodbye. I'm Montgomery Jones.
And I'm Amalia Dupre. Good night for now, until we cross paths again tomorrow.
This content is sourced from the Seeking Alpha website, so support our podcast by becoming a Seeking Alpha Premium subscriber. See the show notes page for links to sign up. This episode is produced by Classic Studios. Check out our other podcasts in our network at classicstudios.com.